So why the market's going up? Well, the markets are going up because now the bet on the Fed street is that the Fed is going to pause interest rates and then lower them at least 75 basis points next year. They always lower interest rates in the run up to the presidential reality show. And that's all this fucking shit show is. It's a fucking 2-bit reality show.
Gerald Celente is the renowned, if somewhat controversial, publisher of the Trends Journal. He is a trend forecaster, business consultant, and author who has been making predictions about the global financial markets and other important events for over 3 decades. Last year, on February 22nd, Gerald predicted that we were heading for World War III, beginning with a war between Ukraine and Russia. Russia invaded Ukraine just 2 days later. Even more chilling is his prediction about a Middle East war. On January 3rd, 2023, Gerald again predicted that a war would break out in the Middle East and things would quickly escalate. He wrote, and I quote, "When all else fails, they take you to war. As economies decline, we forecast Washington will ramp up its proxy war with Iran and do all it can to support Israeli actions against Tehran. With the current Israeli government in charge that has been termed far-right by the mainstream media, we forecast that military conflict will erupt between the United States and Israel versus Iran. When this occurs, oil prices will hit new highs, inflation will sharply rise, economies will dive into depression, and World War III will intensify." While both of these tragedies and several others are playing out around the world, the U.S. government and mainstream media are bent on distracting the American public, so we don't even see the decay going on in our communities, much less the rest of the world. In a recently uploaded video on YouTube, Gerald takes a deep dive into some important global trends, which he believes will shape our very near future. These are trends that the mainstream media will try to hide from you to keep you permanently unaware and fixated on the farce of the American dream. We will now bring you clips from Gerald's recent video from the Gerald Celente YouTube channel. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
So why the market's going up? Well, the markets are going up because now the bet on the Fed street is that the Fed is going to pause interest rates and then lower them at least 75 basis points next year. So anyway, going back to the markets, that's what's pushing them up. More cheap money going to flow into it. Now, what's also happening, we said, when this happens, gold is going to go up. Now gold's like trading now as we're talking about $2,040 an ounce. And if there was no Bitcoin in the scene, if there were no cryptos, it would be much, much higher. Fed leaves rates alone and predicts 3 cuts in 24. We say more than 3 cuts in 24. Landlords resume rental concessions. That's right. They're lowering rents. So it's showing you where it's a slowdown. And yes, that's bringing inflation down. But also now you just saw the mortgage rates drop below 7%. We don't see a big decline in housing prices. Matter of fact, there's a good opportunity they may even go up. But what no one's talking about as these markets are booming is the commercial real estate bust and the office building bust that's going to bring down the banking system. No one's talking about it. What else do we have? Are you ready? Again, each week in the Trends Journal, this is our 65th week of doing it, we have all the firings going on, people getting laid off. 65 weeks been doing this. Ready? This came out yesterday from the Messenger. More than a third of companies are expecting layoffs next year. Almost 40% of companies are forecasting layoffs in the coming year, and even more are anticipating a hiring freeze, according to a survey of 906 business leaders by Resume Builder. In the first 11 months of the year, companies have cut 686,860 jobs. You ready? 115% increase announced during the same time as last year. This is according to Challenger Gray and Christmas. This was the highest January-November job loss total since 2020. The world's poorest countries buckle under $3.5 trillion in debt. Record debt burdens are threatening these developing nations, according to the World Bank, just to show you how bad things are. And again, what they write in this article, what I'm going to tell you, they don't talk about. They go on to say the latest report by the World Bank said that low and middle income countries paid $443.5 billion toward principal and interest in 2022. This is the highest level in history and a 5% increase from 2021. The organization projected that the total would rise by nearly 40% in 2023 and 2024. The bank estimated that more than half of the world's low-income countries were facing debt distress. Okay? Debt distress? How about a migrant crisis? How about more wars? How about more people escaping lack of basic living standards, government corruption, crime, violence? Not a word about that. This thing's going down. Just because the equity markets are going up means nothing compared to the global scheme.
Gerald has made several important observations, especially about the latest round of reckless monetary policies that are about to be unleashed by the Federal Reserve. At first, they deliberately kept rates low for years, despite several warnings about the dangers of doing so. Then, they let inflation run amok until it was too late to control it without hardworking Americans paying a very costly price. Now, as the 2024 election nears, the same Fed that has remained absolutely resolute about hiking rates for as long as possible until it achieves its 2% interest rate target is suddenly considering a pivot. They didn't consider a pivot when corporate bankruptcies recorded in the first half of the year exceeded that of all of 2022 and climbed near 10-year highs. But they are doing just that to progress their political aspirations, all at the expense of the American public. Let's get back to Gerald's video as he explains more trends and what they mean for us all.
Argentina's annual inflation rate hit 161% in November. Inflation is expected to climb faster in the months ahead. This is this new guy, Milei, or whatever the Cazzone is, the arrogant guy. They devalued the peso by 50% this week. Part of a wider shock package he hopes will eventually stabilize the economy as you're fucking over all the people. Latin America's number 3 economy is a prolonged economic crisis that has steadily eroded the value of the local currency while plunging, you ready? 2/5 of the population into poverty. Again, migrant flood, civil unrest, and violence. This is the cover of the Trends Journal of the Wall Street Journal today that I pay $5 a day for. Beijing snowstorm brings forbidden pleasure. Isn't that nice? Yeah. City slippers. Visitors to the forbidden city. Look at this. Look at this shit. Look at this fucking shit. Who the fuck are you talking to? Who the fuck are you talking to? I didn't get one article out of today's Wall Street Journal, either section, that was trendworthy. Nothing. Zero fucking data. Because they're all little fucking whores. Because they suck up to the politicians. Speaking of bullshit, crap, and scumbags, more than 2/3 of the U.S. House of Representatives voted in favor of a defense policy bill today that includes a record $886 billion in annual military spending and authorizes policies such as aid for Ukraine, push back against China in the Indo-Pacific. Hey, don't you all care about pushing China back in the Indo-Pacific and Ukraine? The fucking country's going down the crapper, and these little fucking crapheads are stealing our fucking money to give to the military-industrial complex. Yeah, the guy Lloyd Austin, the defense contractor, yeah, Secretary of Defense, last job with Raytheon. the second largest defense contractor in the United States. This is the shit that's going on as our country is going down the crapper because we got crap heads in charge.
There could be a silver lining in all of this for investors who are preparing now by investing in hard assets that have been known to survive similar situations over and over again for thousands of years. In the near term, a Fed pivot will be very great for gold and silver prices. Gold could hit new all-time highs, and silver will massively outperform. The longer-term picture is even more bullish as long as governments continue printing recklessly. Please share your thoughts on the video in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.